afternoon, Maverick Traders. It's April 7th. It's market roundup time, Thursday, ending the week here. Let's get into how the markets performed. I've got my 2 cents on the markets. I've got some trades to take a look at. Just take responsibility for the outcome of anything you follow along with. You guys know the drill. So market analysis wise, folks, we are still in a corrective, I'm going to call it a corrective week. And you can see here, we're going to zoom in on the charts a little bit, but the overall price action is currently below where they were on Monday. Monday looked to be a pretty promising confirmation day of a bull pullback, and the markets have failed to really do anything past that. In fact, we've slipped a little bit lower on both the SPY and the Qs to pretty significant levels, price action wise, but it doesn't mean that it's the end of the world. It just means it's going to be a little bit more bearishness moving forward. So the markets recovered today pretty substantially. The Dow, the S&P, the Nasdaq, you guys can see all to the plus side. Nasdaq barely making it at 0.06%, so it climbed back substantially. But these all three of them did start really low, and they climbed higher, but they did erase all of, I should say, the day's losses. However, it didn't gain much traction when it comes to the week. In fact, we barely poked our head above where we were after the gap down yesterday, which turns out it was a pretty substantial gap considering there's really not much behind it. So the advanced decline line, folks, 54% decliners, 41% advancers, even in light that we did climb off of our lows and close to the bull side, we still had more declining than we did advancing. Above, below the 50-day moving average, it's actually teeter-tottered a little bit more to the south side. I saw this almost at 50-50 2 days ago. And today it's skewed a little bit to the bearish side. Taking a look at the heat map there, I'll zoom in on all these. You'll see that it was kind of speckled. There really wasn't much participation. This was more of a sideways day than it was a predominantly bearish or bullish day. I mean, just because we climb back and close positive doesn't make it super bullish. But it does show that we're not willing to follow suit with the gap down and continue to see more bearish. So let's break this down when it comes to the charts. Here's our SPY. What I'm looking at is this inside day. You've got this almost harami pattern, or I should say bullish engulfing. The problem with today's action, it was great. It was nice. It closed the SPY itself actually up 0.5% off of for where it opened, but it bounced off of its rising 20-day moving average, right? But it's still parked slightly below that 200-day, so it didn't really do much. It did exceed where it was from yesterday. That's about it. It didn't really close the gap. It's not regaining the majority of the week's losses. It's below the 450 mark. There's all sorts of pessimism I can say about this candle. However, what I can tell you is there's no follow through when it comes to the bear side. So it's not much we can do with this. 2 days ago, folks, I talked about the push-pull method. It was on Tuesday's class. It's like, okay, we had a beautiful confirmation on Monday. It was erased on Tuesday. Wednesday had a gap down. Today's candle is trying to negate as much as what Wednesday did to the markets as possible without giving it a sign of predominant bull or bearish action. This is a very difficult situation to be in. So I'm still going to have to keep this as glass half full. You'll see this when I get to my outlook here in a little bit. So let's take a look at the Qs. It's a little bit darker of a path. You can see that we're actually below the 200-day moving average. We're above the 50-day moving average and the 20-day as a crossover. But I'm not seeing anything too special in this one either. This one looks weaker. We don't have the bullish engulfing candle that we do in the SPY as we do here in the Qs, which were just below the close from the previous day, but this one actually eked out a small gain, 0.24%, being on the Qs, just slightly above. And the Nasdaq, once again, 0.06%. It did everything it could, fighting tooth and nail to get above yesterday's close. This would be a little bit more ominous, and it still doesn't look very strong. However, it's still at that support level at the 350 mark and right around that crossover of the 2050. Now, what does that mean? Not a whole heck of a lot. I take a look at this heat map, and even those big majors. I've been talking and touting a whole lot about, hey, this top third left quarter of this heat map is driving the markets up and pulling them down and so on and so forth. Well, guess what? Lots of kind of a brown color, dark greens and lighter browns, which means not a lot of moves up and not a lot of moves down. Kind of quiet when it comes to those major indexes, or I should say the mega caps, right? Now take a look at the consumer defensive, the healthcares, the medical devices, all of that energy. I'm seeing a whole lot of green. So even in these corrective markets, what's leading the way upward is still defensive. And I just can't shake that, folks. We're talking about all sorts of different articles over this week of, the next generation is retiring off of cryptocurrencies and blah blah blah, and so we're still hearing the Elon Musk buying into Twitter, and the mega caps are leading the way, and cryptocurrencies is the future, and we're still seeing that. But why is there still a flight to safety in healthcare, defensive, energy? We do have a massive crisis when it comes to some recessionary pressures. Once again, I might be stepping a little bit too far down the line there, but folks, it's in our face. Prices are rising, employment stagnant, if at best. So we'll see where that's going to kind of pan itself out. So it's a very interesting thing when it comes to my attitude, my opinion, so on and so forth, versus what the markets are doing. But they have considerably stalled out at a pretty significant level. So where does that leave me? Well, taking a look at this chart, I'm just going to go from price action and the overall motion of the ocean, right? So we're above the 20-day moving average, above the 50-day moving average. The 20-50 slope is still in a yellow. It was, you know what, I guess I could actually skew that because that 50, that pink line, is actually sloping higher. I could turn that green, but it's not going to change my attitude. I still believe we're in a pullback, so I'm not changing my weekly outlook. I do believe that yesterday's candle did spook me a little bit. I was expecting it, but today's action, I'm going to have to be honest here, folks, it shows a little bit of stabilization. This could be a beautiful bull pullback pivot point if we can sustain some energy here and move above this with some increase in volume and get above that 200-day moving average. It could be a very solid bull pullback. So I'm a +2 on the monthly outlook. I have to be. I don't want to be. But I have to be on that monthly outlook. A couple things that kind of jibe with this is the potential trades. Now, folks, today we did climb off of those lows and close pretty much flat for the session, but there was a lot of bull stuff that did very well. And back to what you guys saw on that heat map, have continued to be doing well. ABBV, PEP, VST, I didn't pull their charts because they've gone parabolic. These things just set highs and break into new highs and continue higher and move higher. I did throw out a couple that had a little potential, the Chicago Mercantile Exchange and NUE, mining. I thought they were pretty cool. One sideways trade that was really neat, brought up to us by one of our traders, carried over into the Sunday class, and it still looks pretty cool moving forward because it looks like it's trying to bounce off of that lower support level with its channel range. And then two potential bearish trades that didn't confirm. What I like about that is they were going to, but the markets turned around and retraced all their losses. However, if the markets start to slip, these bears will probably follow suit. So let's start with the bulls first. This is the Chicago Mercantile Exchange. Beautiful move over the last couple of days above the averages. Today looked like it was done. Opens up, starts to fall apart, hits that 50-day 20, breaks the 20, hits the 50, comes all the way back and confirms the continuation of a nice bull pullback. I like this trade. When we talked about it yesterday, I still like it. I think it's a little bit of a push-pull hiccup that's going on, but the overall trade itself is still intact. I don't know if I'm going to be super aggressive thinking 255, 260 is a target, but 245, 250, 255, 250, 255 diagonal. Yeah, something sideways to up. Absolutely. So keep that in mind. Nucor. Sorry, I called it new mining. I apologize, folks. Nucor. It's a basic material steel, so on and so forth. But it did have a little bit of a hiccup. This looked substantially better on Tuesday and Monday. Wednesday, it looked like it was a little bit of a hiccup, but what I do like is that even though the open close of the candle was below a level of 150 that I'd like to see it, it came back and closed above the 150 mark. Now, if it can stay there for a day or so, I'd be a little bit more confident going into tomorrow or into the weekend, I should say, with this being above 150. But diagonal spread, for sure. For sure. This isn't something I'm going to go straight up by the calls for and expect it to hit 160 in 2 days. But diagonal, butterfly, credit, something that if it can sustain that 150 or above might be something pretty cool. Now, the other ones on the bull list, please, folks, please go look at them. But they're just gone gangbusters. ABBV, things we've been touting for, weeks. Not just the last few days, but weeks. They continue to move higher. So let's jump over to this cool little sideways stock. I like this Cisco. It came up from, like I say, one of our traders, and we implemented it into the trading room. I carried it into yesterday's class, and I love this 54, 56 level. The discussion was, hey, we could see a little bit of weakness. I should say my discussion was, I think this could slide if the markets break in 54. Cisco sideways to down could be a good trade. But if it's going to hold up here, and we see these markets start to sustain themselves like we did today going into Friday, maybe the bearishness is a little bit more relieved. Having this above 54 is all you need. You don't need this to get to 56 if you're playing between that range. And you guys can see as of the end of January, this thing loved that 54, 56 range, somewhere around that. So I still like it as sideways. It's a lot better on the sideways than it looked yesterday, obviously. But keep an eye on that. If you like it sideways, play it. That's cool. If it seems to roll over and the markets start to collapse, a break below 54 still is a little bit on the bear side, but I do like it for what it is. Now, speaking of which, I got a couple of bears that did head fake. Now, why I like head fakes is because they followed the motion of the ocean. This was a beautiful breakdown, great trade. Taking a look at break below the 90 level, we got it. Broke below the previous day's low, we got that. The markets turned around and came running back, and this came with it. So, a little bit of a head fake. If you were triggered into this, and you're bearish into this, I'm still pretty confident in it. I like it. If I was bearing this from today, I'm still feeling pretty good. It's a bearish pattern. It looks bearish. It looks great. I mean, we've seen this thing turn where it's at, but with those lows getting higher and those last move to the upside at 95 couldn't really exceed the 50-day. Yeah, I'm a little bit glass half empty, but I don't have to shoot to 80 in the next 3 days. 90-85 diagonal spread, a 90-85-80 targeted butterfly spread would be pretty cool. If it decides to drop fast, you can take half of the profits there. If it wants to take its time, that's great. Give it about a week and a half. It's a really good trade to the downside. Roku is also on the bear watch. This is the one that I kind of liked. It really didn't bounce as much as I saw some of these oversold stocks do. Keep that in mind, guys. I keep saying you want to see the biggest bounces ever on an up day. It's going to be your mega caps. It's going to be your oversold stuff, your stay-at-home stocks. You're going to get, oh geez, folks, I don't know what it was, but Gamestop was up 200% in the last 6 days, taking this week out of consideration. 2 weeks ago, I got an email from actually a friend, a relative of mine talking about, hey, what should I do here? And it went from 100 to 200 and oh my gosh, I don't know what it was, like 6 days. Lots of stuff off the bottom there. This isn't one. This isn't participating in those huge bounces, which leads me to believe that there's some impending bearishness on here that we can actually play. Now, I don't think it's going to drop to $100 tomorrow, but take a look at the behavior of this thing. It just bleeds sideways to down. So diagonal spreads, calendar spreads, slightly out of the money, credit spreads, stuff like that. All right, guys, so long story short, I don't have much for you. The markets are lower on the week, but have yet to break any significant levels. There is ominous out there. The price action is showing, oh gosh, after that little head fake on Monday, there's fear. It's done. We talked about it on Wednesday, I believe, and Tuesday about, hey, it was the end of the first quarter of 2022. Maybe the window dressing's done. All the people that needed to buy are in, and they're going to see what happens next quarter. So we got the transition out of one quarter into the next. That could be a part of this. Maybe there's no participation, yada, yada, yada. I've got 1,000 different comments and ideas. However, the price action is showing us it has dropped, but it parked itself above anything significant to show absolute price failure. We have yet to see that yet. It's funny to hear me say it out loud. We have yet to see it, I should say. So be patient. It's just an aggressive pullback for now. Once again, folks, my monthly outlook is a +2, and I hate it, but it is. Weekly outlook is 0. It needs to stay here to gain any sort of traction. No change on the economic front. Absolutely nothing. Super hawkish. Lots of worry. Janet Yellen actually came out, and once again, she was the Fed chair for a while, and now she's, our secretary. So, she comes out and talks about, the impact of Bitcoin, and oh gosh, you can, once again, all sorts of different topics. But there is concern on where this economy is going to go and where this money that's in the markets and the disconnect that it has when it comes to the economy is going to go. But no change. Not bad, not worse, but not better. Please keep that in mind. Earnings reports, nothing. I'm just going to not worry about it, guys. Just trade what's in front of you, because I'm seeing a lot of great trades come across the docket, and I do like them all. Just make sure they're outside of their earnings if they become pretty specific. But other than that, it's pretty much the same as it's been. Follow the markets and trade the markets in front of you guys. Follow your plan. If you got any questions, you know how to get a hold of us. Thanks for joining me, and we'll see you next time. Bye, everybody.